Ready? Good morning. The Committee on Ways and Means will come to order. Today, the committee will consider legislation to repeal certain so-called 1099 reporting requirements. H.R. 4, the Small Business Paperwork Mandate Elimination Act of 2011, repeals one of the most often and widely criticized pieces of the Democrats' health care law, the 1099 reporting requirements for small businesses. Republicans have called for its repeal from day one, and I give my counterparts some credit here because it didn't take them long to follow suit. Even President Obama has endorsed getting rid of this onerous tax reporting requirement. It had been my hope to build the legislative history of this bill, since I expect H.R. 4, introduced by our colleague Dan Lundgren of California, will ultimately be the bill number presented to us on the floor. But procedural limitations prevent us from further amending this bill to include other important provisions. As such, once we complete action on H.R. 4, we will immediately consider H.R. 705, the Comprehensive 1099 Taxpayer Protection and Repayment of Exchange Subsidy Overpayments Act. Like H.R. 4, H.R. 705 repeals the burdensome 1099 tax reporting provision included in the Democrats' health care law. However, there are two key additions. One, a repeal of the additional 1099 reporting requirements that Democrats placed on owners of certain rental properties last year. And two, measures to reduce the deficit by reducing waste, fraud, and abuse embedded in the health care exchange subsidy program. First, the rental reporting requirements. To help pay for the Democrats' small business lending law enacted in September of last year, Form 1099 reporting requirements were expanded even further than they were in the health care law. This new provision generally treats the recipient of rental income from real estate as engaging in the trade or business of renting property. This is the first time that Form 1099 requirements have ever been imposed on taxpayers who are not engaged in business activity. Individuals and families that rent real property, a vacation home, a condo, or even a spare bedroom for even just a few weeks or months out of the year now must comply with complex new filing requirements for everyone to whom they pay more than $600 a year, like plumbers, furnace repair, cleaning services, and the list goes on and on and on. It's a nightmare for taxpayers, and it should be repealed. Let me especially thank Mr. Teaberry for his work in raising awareness of the impact of this requirement and the importance of repealing it in this legislation. The second additional provision we'll consider as part of H.R. 705 deals with recovering overpayments of health care exchange subsidies. Under the new health care law, billions of taxpayer dollars will be spent each year on subsidies for individuals who do not qualify for them. Some of that is a result of outright fraud. Congress took steps to close that off in December when we voted 409-2 to provide for greater recapture of improper payments as part of the temporary doc fix bill. To better protect American taxpayers, H.R. 705 will increase the maximum amount of health care subsidy overpayments that must be repaid. In rooting out this waste, fraud, and abuse, we will save taxpayers $25 billion over the next 10 years. When combined with the repeal of the two 1099 reporting provisions, the amended H.R. 705 will reduce the deficit by $166 million. In my judgment, this is a win-win for taxpayers. It's a win for small businesses who won't suffer under the new 1099 reporting requirements. It's a win for individuals and families who may rent out property and could have faced a mountain of confusing paperwork. And it's a win for the taxpayers who are being asked to simply look the other way and allow tens of billions of their hard-earned dollars to be erroneously, wastefully, and in some cases fraudulently handed out by the IRS when the new health care subsidies start in 2014. At this time, I'll yield to the ranking member for the purpose of his opening statement, and without objection, I ask that all members' written statements be included in the record. Mr. Levin.
Thank you, Mr. Chairman. It's clear that there is strong feeling on both sides of the aisle regarding 1099 and the desire to repeal the provision as it was written. Unfortunately, those provisions were very poorly designed, poorly drafted. And I think we need to, as we proceed to repeal it, look at the problem that it was supposed to address. Clearly, there's a need to to increase compliance relating to the underground economy in this country. And the extent of it is shown by the estimate as to the lost revenue that will occur from the repeal of this act. Let me just make it clear that we tried in 2010 to repeal it and to pay for it. That came up on suspension and had 241 votes for, but 154 votes against. The argument of those who voted no, and they were mostly on the now majority side, was they did not like the pay-fors. Many of those pay-fors have become law, and so I think it indicates how mistaken it was for those who voted against the repeal in 2010, with a pay-for very different than the one that's proposed today, and one, as I said, a series of pay-fors that have become law. Let me just say a word, and this will be discussed further, the pay-for here in the second bill. We'll discuss it, and I think the more there's an understanding as to its implications, I think the more there'll be a realization that it will create some problems for middle-class families who are trying to obtain health care under the Affordable Care Act. So that's, I think, where things stand. We're here today because of a provision that was not drawn appropriately. We're here today because of the failure last year to get the necessary votes on suspension to pass a repeal with a pay-for that was, I think, a much more laudable one, and so much so that good parts of it, 13, almost 19, 14 billion, has become the law of this country. Thank you, Mr. Chair.
Well, thank you. The committee will now proceed to consideration of H.R. 4, which was distributed in advance along with a green sheet explaining it. Without objection, the bill will be considered as read and open for amendment at any point. I will now turn to Tom Barthold, Chief of Staff to the Joint Committee on Taxation, to provide the technical description of H.R. 4, and I would ask that members hold their questions until after his presentation. Mr. Barthold.
Thank you, Chairman Camp. We're describing just H.R. 4 and not your substitute for H.R. 4.
Correct.
H.R. 4, as you noted, relates to provisions enacted last year, and I thought it might be useful for the members just to step back and think prior to 2010 what reporting requirements were. Prior to 2010, anyone in a trade or business who paid $600 or more for services to a service provider other than a corporation was required to provide information reports known as 1099s. That was in 2010. That rule was expanded, as Chairman Camp explained. H.R. 4 would repeal the requirement that extended the 1099 reporting to payments for goods, and would repeal the requirement that extended the reporting requirement to payments made to corporations. And H.R. 4 would repeal it by going back to the original legislation, and would be effective on the date of enactment.
Thank you. Are there any questions for Mr. Barthold?
Mr. Barthold, just a question.
Mr. Levin is recognized.
Because I think most of the discussion will relate to the second bill. So, just to be clear, the estimate as to the lost revenue, just briefly describe what is the basis for that estimate.
Certainly, Mr. Levin. The reporting in general, reporting requirements have multiple effects. Oftentimes, it can require taxpayers to keep better records so that they actually have a better sense of what their costs are, and on the receipt side, what someone's income is. It enables the IRS to then use this information on an audit to verify claim deductions or amounts of income reported. And ultimately, as the IRS develops additional computer software systems, it enables matching to lines on the form so that without having a formal audit, letters can be sent out asking taxpayers for further information to verify. So in general, the provision is about getting better compliance through better measurement both of income received by a service provider and costs claimed by someone who is making payments.
And so your estimate is based on how much additional revenue would come from these additional compliance measures?
From improved reporting, both in terms of honest taxpayer errors or oversights and through perhaps intentional misreporting.
Thank you.
Thank you. Mr. Neal is recognized.
Thank you very much, Mr. Chairman. Mr. Barthold, let me ask you about this 1099 reporting that we're repealing today. My understanding is that there already exists a type of reporting that's going on. Can you explain the value of third-party reporting and why we rely upon it?
Yes, Mr. Neal, thank you. I tried to give a sense of that in just my brief overview. The general requirement prior to last year, just to repeat, was that any taxpayer in a trade or business who made payments of $600 or more for services, not services and goods, to a provider other than a corporation, was required to make these third-party reports. Last year, as Chairman Camp noted, this was expanded. H.R. 4 would repeal the requirement, expanding it to goods. It repealed the requirement, expanding it to corporations. The general value of third-party reporting, as I noted in my response to Mr. Levin, is it can help the taxpayer who makes these payments in their record keeping. I mean, it essentially enforces upon individuals that they keep better records so that these reports can be filed. The recipient of the payment, it provides a record of payments to them, and then from the IRS's perspective, these reports that are third party from someone who has no direct interest in the other person's tax return, the IRS can use that information to match up and help ensure that taxpayers are properly reporting income received or costs claimed.
Thank you. Now, I understand that with this new type of reporting, we're asking a whole lot of third parties who have had no part of tax avoidance to take on the burden. That's led many of us to support the repeal of the provision. But it also begs the question as to how we capture the $22 billion it's estimated to be outstanding. Can you tell the committee how much of this $22 billion is under-reporting of income and how much might be due to the penalties on innocent third parties who failed to report on others?
Mr. Neal, I'll have to get back to you later to try and give a breakdown. I will tell you, as a general matter, when my colleagues on our quantitative economics staff, when we assess most of the effective penalties, we don't see the penalties payments themselves per se as significant factors, but rather that unless penalties are at a trifling level, that people see the penalty as something they do not want to incur and make the required reports instead. But as to your specific question of the amount of our estimate that we would estimate attributable to penalty payments as opposed to improved measurement of income reporting, I'll have to check with my colleagues and I'll respond to you later.
Fair enough. Mr. Chairman, my concern is, as you know, as a long-serving member of this committee as well, that across the street we're debating how to save money by laying off Social Security workers, cutting off funding for Sesame Street, and we have $22 billion in tax avoidance that we're doing nothing about today. This estimate is about $290 billion annually. No hearings, no investigations, no debate. There's an opportunity on a bipartisan basis here to go forward with shutting down some of these loopholes, attacking the issue of tax avoidance, and many of us on the committee have tried over many years to speak to what are egregious efforts to avoid paying taxes. And we can't suggest that because one region of the country thinks that they benefit or that we subsidize others over our domestic companies to keep these preferred rates, or in a bold effort simply to avoid any sort of tax compliance, that it strikes me that there's an opportunity here to go forward on many of this, and I hope many of these issues, and I hope, Mr. Chairman, that we can conduct vigorous and aggressive hearings on what tax avoidance means every single day. Thank you, Mr. Chairman.
Thank you. I would just say to the gentleman that I am very interested in fundamental tax reform, and that means all of the issues. And so I look forward to working with you to identify some of these areas. There are lots of problems with our current tax code, and avoidance is one of them. I believe Mr. Teaberry would like to be recognized for the purposes of a question.
Thank you. Thank you, sir, for being here today. Were the penalties for failing to file a 1099 with the IRS increased last year? And if so, what were the increases?
They were increased $100 per report not filed.
$100 of a penalty for 1099
penalty was
not
increased
filed.
by $100.
And so, let me give you a hypothetical then. If Grandma Smith owns rental property, she lives in one side of a 50-year-old double, and she rents out the other side. My understanding is that in the small business bill last year, the provision that you just spoke about, the increase in the penalty, and a provision that became effective January 1st of this year that requires Grandma Smith and every other landlord to file with the IRS at 1099. For instance, if the furnace went out last week and from her tenant, and she had to go call a heating and cooling specialist, cost $650. Now it's Grandma Smith's responsibility to go get a 1099 and file that with the IRS. Is that correct?
Mr. Teaberry, I think in the situation that you described, you're saying that the grandmother in this case, by the small business bill, would be deemed to be in the trade or business. And as I described previously, if someone was making payments to a service provider, the $650 for the furnace repair, other than a corporation, the change in the small business bill broadening that would have required a report be filed for that. Yes,
Would it cause Grandma Smith to do it each time she?
It's an annual report filing. So if for example, there were just to elaborate on your example, and I guess we should note that what we're talking about here is in part not what's covered in HR 4.
Right.
Just to
But the difference between what's covered in HR 4 is that that's effective next year, correct?
No. The difference is, and that's why I was
in terms of time that the law becomes effective.
I was trying to listen to your example of the grandmother, because what HR 4 only relates to people who are in the trade or business.
Right.
And if it were not the case that this woman renting this out were deemed to be in the trade or business, she would not be covered by or affected by the changes made in HR 4. Remember?
Right. Yeah, but in the small business bill.
I would
That's
just
correct.
say that this is outside the scope of HR 4.
That's what I was
Right,
asking.
right.
We are going to have an opportunity to question on HR on the other bill. So
Fair enough. I will reel back and I'll come back to it, Mr. Chairman. Thank you.
are there any other member questions regarding HR 4?
Mr. Chairman,
Mr. Rangel's recognized.
I just want to take this opportunity to agree with Richie Neal and you about the tax reform issue. I mean, this is a big elephant in the room. It's been since 1986 that we can bring about reform, and the whole idea that we have to deal with the grandma in the house next door and reporting things. And you're dealing with this kind of money, and we know that in the tax code there are billions of dollars there that no one wants there except those receiving this type of preferential treatment. And year after year, Republicans and Democrats just act like it's not there because it takes some pain to tell somebody that's getting an unfair advantage that he's going to have to pay taxes. And I know you call it a tax increase, but for those of us who believe the corporate tax is entirely too high, I really believe we can bring it down to something that's accepted internationally and at the same time raise some money so that we don't have to be dealing with causing people to have to go through what the Congress had done here. So all I'm saying, and I guess it's not a question unless the Joint Committee has any reasons why, especially at a time of fiscal crises, how we can explain to our kids and our grandkids why we didn't pause and at least have a system that if we have to raise funds through the tax system, people believe that it's fair. And I think whether it's Republican or Democrats, at the end of the day, people believe unfairness is the biggest reason why they resist the Congress and especially this committee. So every time I get a chance, and I know I can rely on Richie Neal, it's right there in front of us. All we need is the will, and there are enough winners and losers so that we can come out of this not unscathed, but at least with a minimum amount of political damage. Thank you.
Thank you. Ms. Berkeley is recognized.
Mr. Chairman, is this an appropriate time to make a statement for the record on 1099, or will there be another time available?
There will be another time. This is really an opportunity to ask a question of Mr. Barthold about any technical aspects of the bill.
Will you keep me in mind when statements are in order? Thank you.
And all members will be able to make a written statement as well and put it in the record also. Mr. Thompson.
Thank you, Mr. Chairman. And I agree with folks who have stated that we need to figure out this whole issue of tax reform. On this particular issue, it's been stated, there was some reference made to tax avoidance. And I was always taught that there's a difference between tax avoidance and tax evasion. And the way I read this underlying issue is there's, and I'm not sure how we're doing the math today, $22 billion or $25 billion worth of tax evasion that's taken place. So I'll stipulate we need to figure out how to do a better job with this cumbersome provision whereby all of this extra paperwork needs to be done, and I voted that way on the House floor and will vote again today to do away with this provision. But my question is, how do we get to the underlying issue of $22 or $25 billion worth of tax evasion? That's the underlying issue. That's the whole fairness issue. This was designed to capture that amount of money from people who weren't paying what they're supposed to be paying. And as Mr. Rangel said, we have a system based on fairness. And the American public wants a tax system that's fair. It doesn't require they make their tax payment, but the guy next door, and I don't know that it makes a difference if it's Grandma Smith or Grandpa Thompson that's not paying their amount of tax that they owe. How do we do that in regard to these folks who are not paying what they're required by law to pay?
Again, it isn't really pertinent to the bill we have before us, and this is not an opportunity for general debate. It really is, we're very narrowly focused here on H.R. 4 and any technical questions with regard to H.R. 4. So I think this is really outside of the scope of what Mr. Barthold is here, but I'd certainly be willing to talk to you after this hearing. Are there any further questions? There being no further questions, are there any amendments to H.R. 4? Ms. Berkeley.
Mr. Chairman, I move to strike the last word.
The gentlewoman is recognized.
Thank you. There's no doubt that the 1099 provision from the Affordable Care Act simply must be repealed. The reporting requirements this provision places on businesses are onerous, time-consuming, ridiculous. It's too much to ask the hardworking people that are trying to make something of their small business do when they're trying to power an economic recovery. I was happy to vote for repeal during the last Congress. I think I did that a number of times, and look forward to getting rid of this provision. Unemployment is far too high in my district for me to be worrying about whether job-creating entrepreneurs in my district are filling out tax forms instead of writing paychecks to new hirees. Yet, as much as I like this proposal to repeal 1099, I dislike the proposed pay-for even more. Changing the caps on the true-up provision of the Affordable Care Act is, in my opinion, absolutely the wrong way to pay for this legislation. The people most affected by this are poor and middle-class families who are already struggling to make ends meet. Despite the glitz and glamour many people associate with my congressional district, it's these families that are the lifeblood of my community, and those are the people that I represent. The worst part of the proposal is that there are other places to get this money that won't affect the middle class. The Senate recently passed legislation that would repeal the 1099 provision and pay for it by granting rescission authority to OMB for certain discretionary funds. This bipartisan Senate bill passed overwhelmingly, and it would be a good place for us to start looking for common ground on this issue. There are other possible ways that we could pay for this, including many subsidies that we provide to oil companies in the tax code. These companies, among the most profitable in the world, get generous subsidies from the very people and the very taxpayers who we're going to hit again by this proposal. Repealing the 1099 provision is certainly something that must be done to avoid harm to the economy, but let us not balance that cost on the most vulnerable among us. Therefore, I will support the legislation repealing the 1099 reporting requirement, but oppose the misguided way that has been proposed to pay for it. I hope that my colleagues will join me in finding a way to pay for the repeal that is not just fiscally responsible, but socially responsible as well. It's a shame that the proposal before us fails this test, and I yield back the balance of my time.
All right. The gentlelady withdraws her amendment. Are there any other amendments to H.R. 4? There being no amendments, I will now recognize Mr. Herger for the purpose of offering a motion.
Mr. Chairman, I move that the committee favorably report H.R. 4 to the House of Representatives.
The question is on favorably reporting the bill. All those in favor signify by saying aye. Aye. Those opposed signify by saying no. The ayes have it. The motion is agreed to. There being unanimous support, the motion is agreed to. H.R. 4 is ordered reported to the House of Representatives without objection. Staff is authorized to make technical and conforming changes to the bill. Without objection, members will have an additional 2 days to file with the committee clerk supplemental, additional, or minority views. So ordered. The committee will now proceed to the consideration of H.R. 705. Without objection, the bill will be considered as read and open for amendment at any point. I offer an amendment in the nature of a substitute, which was distributed in advance along with a green sheet explaining it. Without objection, the amendment in the nature of a substitute shall be considered as read, open for amendment at any point, and considered base text for purpose of amendment. Again, I will turn to Tom Barthold, Chief of Staff to the Joint Committee on Taxation, to provide the technical description of the amendment in the nature of a substitute. I would ask that members hold their questions until after his presentation. Mr. Barthold.
Thank you, Chairman Camp. The amendment in the nature of a substitute itself is very short. It only modifies the effective date of the provision related to the premium assistant credit reconciliation so that it applies to taxable years ending after December 31st, 2013. Should I review briefly the two other pieces that we did not talk about in H.R. 4? There are then three other changes that the chairman's amendment in the nature of a substitute makes. The first is with respect to the 1099 provisions that we were just addressing in regards to H.R. 4. There's a technical change in that H.R. 705 would strike the provision from the Internal Revenue Code rather than repealing the underlying section of law that enacted it. It has no economic or consequence. It's really just a technical approach to the issue. Then the next section of the amendment, the nature of a substitute, addresses in part the issue that Mr. Tiberi was raising earlier, and that was the further expansion of 1099 reporting from the small business legislation of last year that would deem individuals to be in the trade or business if they rented any real property, and thus would expand the 1099 reporting requirements that we were discussing to such individuals. Then, lastly, as a revenue offset, as the chairman was describing, the bill would modify the repayment amounts for the reconciliation of exchange credit subsidies. Just to review, certain individuals, if they're would be buying insurance through the exchange based upon their income compared to poverty level statistics, would be eligible for a credit which is payable in advance. The amount of the credit that is paid to the insurance provider is determined in part based upon income information provided to the state exchange from prior year tax filing, among other representations that might be made by the taxpayer. And if the taxpayer's actual current year income is different, then it is reconciled on the individual's tax return, and there were dollar limits on the extent of maximum reconciliation payments. As the chairman noted in his opening statement, H.R. 705 would increase the maximum applicable reconciliation payments. Be happy to speak about any of the details of this provision, but that's a brief description of the chairman's amendment in nature of a substitute to H.R. 705.
All right, thank you, Mr. Barthold. I've been told in about 15 or 20 minutes we will have 14 votes on the House floor. So we'll now move to questions, and so I would just ask members to keep that in mind. I believe Mr. Tiberi had to complete his thought.
Thank you, Mr. Chairman. I don't think I have enough coffee yet. I wasn't very clear in explaining my question. No one likes tax avoidance, obviously. We passed two pieces of legislation last year, one that we just dealt with respect to the health care bill that dealt with the bulk of the 1099 issue. Another was in the small business bill, I think you said, my understanding, that dealt with the rest of the 1099 issue. Both, I understand, operate the same way in terms of the way they function, correct? In terms of the structure of the person. Let me ask you this. Who is responsible for filing 1099?
If you make a payment to another person who provides service or property.
Thank you. So if Grandma Thompson is the taxpayer, the small businesswoman, the landlord, she's not the person who's not paying the taxes. She's actually the person who is paying a repair person. She's the person that's paying Johnny to come shovel her driveway. She's the person who is calling that electrician because her air conditioning's not working. She's the one that's calling the person to fix her sink that's plugged up. But now this Congress last session put the burden on her to 1099, to keep more records, something the IRS should be doing, something that actually the small business person should be doing. We're telling Grandma, you're responsible for now filing these forms for every single person that you pay over the course of the year over $600. Is that correct?
Yes, Mr. T-Berry, that'd be correct.
So we are not putting the burden on the IRS. We're not putting the burden on, or the Democrats last year didn't put the burden on the IRS, didn't put the burden on the vendor. We're putting the burden on the person whose air conditioning went out. We're putting the burden on the restaurant owner whose cooker went down. We're telling them, you got to 1099 everybody who you spend over the course of the year $600 with. And I can't recall a hearing where we had a hearing, not one hearing on the small business bill, that we told every single landlord, or on the health care bill, every single small business person. And now we are discussing tax avoidance and hearings, and I'm for tax reform, but what a nightmare. I'm at a Chamber of Commerce meeting, and people are looking at me like I'm from Mars, that this provision passed without any debate. So, question is, if we repeal this provision in this bill, as we just did in the last bill, we go back to what? What was the law before?
Okay. Thank you, Mr. T-Berry. There are 2 points here. One is the provision that you're addressing was the expansion to individuals who are not deemed to be in under prior law would not have been deemed to be in the trade or business of renting property, and so that would be more in the case of the occasional rental. So
like Grandma Thompson.
Well, your Grandma Thompson actually was somewhat problematic because I think, as you first described her,
before my cup of coffee,
before the coffee, she had this like duplex structure, and she was year after year renting the other half. Now that potentially would have meant that she was in the trade or business of renting real estate.
Right.
Now, if, on the other hand, Grandma Thompson occasionally rented out your bedroom since you left a house to a college student in town, but didn't do that month in, month out, then she probably would not be in the trade or business. And the provision that we were talking about that expanded 1099 reporting to individuals not otherwise in the trade or business would apply to Grandma Thompson.
And she'd be the one that would be penalized by the IRS for failing to file the 1099
right.
for a service or good over $600.
And to correct what I told you before, just so that it's all the members have it straight, the penalties and they were changed. It's actually a tiered series of penalties that you can correct a false return or the non-filing of a return, and so if you correct within 30 days, penalties $30.
But the burden is on her, the one who paid
Grandma Thompson
$650 for the repairman,
would be
$700 for shoveling the snow all winter.
All right, the gentleman.
$800 for lawn care. Thank you.
That's correct.
The gentleman's time has expired. Mr. Levin is recognized.
Mr. Bartow, let's talk a bit about your analysis of the revenue that's raised. There's been discussion about the rental situation. I think you've helped clarify what was in there. How much of the revenue estimate related to other than the rental situation? This raises how much?
Which provision?
Altogether, what we're talking about in 705. What's the revenue estimate?
Okay. Just so so all the members can follow along, our staff provided JCX 14, which is the estimate of the chairman's amendment, the nature of a substitute to 705, dated February 15th, and we list the 3 provisions that are in the chairman's amendment, the nature of a substitute. That's the 1099 reporting requirement, the expansion that Mr. T-Berry was just addressing in terms of the reporting on certain rental payments, and then the change to the limitations on the amounts required for the reconciliation payments. The two 1099 requirements together total approximately $24.5 billion over the 10-year budget period, and the revenue offset obtained from increasing the maximum reconciliation amounts totals just under $24.9 billion over the revenue period.
And does your revenue estimate include an approximation of the number of individuals who would become uninsured as a result of this provision?
Yes, Mr. Levin. In fact, it's a fairly complex modeling problem. We did undertake that estimate, and I'll look up thumbing through to get our estimate. There's several pieces going on as the ability to have the amount of the exchange subsidy limited changes. Some people may choose not to purchase insurance through the exchanges. Some employers may, in conjunction with their employees, find that it's better to retain employer-provided health insurance, and so there's changes in multiple directions. The simple answer to your question is that we estimated that the number of uninsured would increase by approximately 265,000 individuals.
So as a result of this approach, your estimate, using, as you say, modeling, is that about 265,000 would become uninsured?
And I should say that's our projection, our estimate for the year 2016, when the state exchange system sort of fully out of its startup phase.
Okay. Let me just read an example, if I might, quickly, and ask your, there are many examples that are given. Let me give you one. A family with 2 working spouses makes $90,000 per year. The head of the family, who's 55, they would face a premium of $20,000 in the exchange per year. And with the advance payment subsidy of $933 per month, the family pays $713 a month towards the premium. At the end of December, one spouse receives a $5,000 bonus. The bonus pushes the family's annual income above 400% of the poverty level and above the eligibility threshold for the subsidies. During the reconciliation process, the family is determined to have received $11,200 in excess payments. The family's repayment requirement would be limited to $3,000 under the current caps. However, if those caps were lifted, as in this bill, the family would have to pay back the full $11,200. What I'd like to do before this comes up to the floor, Mr. Bartholt, is to give you a number of examples like this and ask if you think they're accurate.
Be happy to work with you and your staff on some particular examples that you'd like us to test against present law requirements.
All right. Time has expired. Mr. McDermott's recognized.
Tom, I'm getting worried about Grandma. Grandma has this duplex and she's renting out one of the units. Does she have to keep a record of how much rent she receives and report it to the IRS?
Congressman McDermott, properly, yes. I mean, that is tax.
What do you mean properly? Does she have any choice?
No. Let me say legally, yes.
So she might be just accepting the rent and not reporting it.
I'm not going to impugn someone's...
well, I want to understand what Grandma is...
I really...
Maybe Grandma is avoiding taxes.
I just think...
Now, what we're hearing...
Mr. Bartholt is not here to give legal advice.
Well, no, but I'm trying to understand the situation. She's got a rental, and she gets $1,000 a month for it. She's got $12,000 in income, and she wants to deduct that $600 she spent on air conditioning from it. Is that correct? That's the theory. That's the $600 she has to report to the feds. That she sent $600.
The expense for the furnace system repair would be deductible against the rental payments she receives in computation of income that she would be reporting on her return.
So she's very carefully reporting her income and then very carefully reporting those expenditures. She must have some bookkeeping system, wouldn't you think?
Well, I wouldn't speculate.
I think that's asking for a conclusion that Mr. Barthold is not able to make.
I just think we're chasing after a red herring when we're talking about grandma. That's not who we're talking about here.
Okay. Thank you. Mr. Davis is recognized for the purposes of a question.
Thank you, Mr. Chairman. Perhaps the gentleman would have suggested Grandma take advantage of the Energy Star tax credit over there to solve this problem once and for all. I think coming back to reality for a few moments on this bill, there's a very real underlying implication that somehow business owners or people who are doing legitimate business are being impugned for the sins of others. And the recapture question I'd like to come back to here for a moment. First, does this make people pay back any more than they were entitled to in the first place? We're talking about non-payment of taxes before and the impugning that people somehow weren't paying their taxes and grandma's illegally running a business. Well, if somebody's paid more by the federal government than they're entitled to under statute, one would think it's reasonable to recapture that in its entirety. Is that the case with the bill?
You're referring to the reconciliation provision?
Yes, that we're discussing right now.
I think he's referring to that.
As you said, sir, the reconciliation provision to just sort of to back up, one is eligible for credit, this subsidy credit, based on your income, and the amount of credit that's paid in advance is determined in part relying on information about an individual or a family's income from prior years, and so that's why the amount of payment may not be the payment that would be made if we truly knew what the family's current year income is. And that's what the reconciliation process is.
And so eventually it gets recaptured, recalculated, and accounts are settled accordingly as they...
It's bringing it up to it. It's making the test against current year income related to the current year's subsidy payment through this credit. So I think that's what you're describing to me, sir. Yes.
Great. And then the final point is, what is the coverage impact of this? And particularly considering that my colleagues on the other side did exactly the same thing that they're disagreeing with now in December of 2010 to pay for the SGR. That was scored as costing about 200,000 people health coverage under the calculation methodology. In this case, what would be the coverage impact of this reconciliation provision?
I'd have to go back and check the prior year number if you wanted a comparison to the prior year. But as I told, I think it was Mr. Levin, for the year 2016, we estimate that the number of people who would be uninsured after this change relative to present law would be about it would increase by about 265,000. There would also be changes in the number of people receiving employer-provided insurance. That, in fact, increases under our modeling.
So this is demonstrably in the same order of magnitude as the proposal that was carried out.
As I said, I will check on the estimates that we made last year, and I'll get that information to you, sir.
Great. Thank you very much. Yep.
All right. Votes are pending on the House floor. When we come back from votes, we will begin the amendment process. The committee stands. Any further questions before we recess? If not, we will begin the amendment process when we return from votes. The committee is in recess. Committee will come to order. I understand during the recess that Mr. Barthold received some information in response to a question from Mr. Neal. If you could share that with the committee, we'd appreciate it.
Thank you, Chairman Camp and Mr. Neal. Mr. Neal had asked, with respect to our estimates of the budgetary effects of the 1099 reporting regimes, the extent to which our initial analysis of the revenues that would be raised by these measures, how much would be attributable to penalties paid by people who failed to make timely file 1099 reports, as opposed to how much would be raised from increased accuracy in reporting of receipts and expenses. And we, in our modeling and from looking at work of the IRS's National Research Project, the NRP determined that really only a de minimis amount would be attributable to penalties paid for failure to make timely 1099 reports, so that essentially all of that estimated revenue was due to improved compliance and improved reporting of expense and revenue.
Thank you, Mr. Chairman.
Thank you. Are there any amendments?
Mr.
Crowley.
Mr. Chairman, I have an amendment at the desk.
Mr. Chairman?
Mr. Chairman. The gentleman will suspend.
I'd like to reserve a point of order.
All right. The clerk will distribute the amendment, and I ask the gentleman to suspend until the amendment is distributed. The gentleman from New York is recognized for 5 minutes.
Thank you, Mr. Chairman. My amendment is very straightforward and simply states that if the provisions of the Chairman's amendment are deemed to increase taxes on middle-class families, this Crowley amendment would block the enactment of the so-called true-ups, also known outside of the Beltway to real Americans as tax increases, while at the same time allowing for the repeal of the 1099 provisions on the owners of rental property and small businesses, which I and my colleagues on our side of the aisle support. Now, I understand the need for some to mask this massive middle-income tax increase as something else, a tax increase in costume, and that's why they use the words true-up. It sounds nicer than tax increases, but if it walks like a tax increase, sounds like a tax increase, and will cost millions of American families up to $5,000 a year, it most definitely is and will be a tax increase. That's why the supporters of this bill say things like, this tax increase bill is actually a fair recoupment of overpayments to people like a form of welfare directed at the middle class, and a way to be, quote, good stewards, unquote, of the taxpayers' money. But that is not correct. In fact, this true-up tax increase bill is a massive income tax increase on lower and middle-income Americans, as well as their newest way to strip private health insurance away from hundreds of thousands of Americans. Essentially, pay more tax and get less in return. Here's how this bill will raise taxes on middle-income families, and you can follow along with this example without even using a paper or pencil. That's how scarily easy this bill goes about taxing working people. If you are a family of 4 earning $88,000 a year, which is about 398% of the federal poverty level based on 2010 guidelines, the Democratic health care bill law caps the amount of premiums you'll be forced to pay annually to no more than 9.5% of your income premiums. In this example, that is $8,360 a year on a typical family policy valued at $13,000. So the family receiving health insurance would pay $8,360 in annual premiums, and the federal government would provide a tax credit valued at $4,640, with these funds going directly to the insurer insurance carrier and not to the family. Right to the insurance carrier does not go through the family itself. If this family got a $250 Christmas bonus or some other minor fluctuation upwards in their income, they would go to a 401% of the federal poverty level. And under the Republican bill, this family would be required to refund the government the entire tax credit of $4,640. This will cause both tremendous hardship to families and lead to a decrease in participation in the health exchange due to fears of massive new taxes on the middle class. And again, let me reiterate, the $4,640 in tax credits never go directly to the family. Rather, the Treasury Department cuts a check to the insurance companies. So in essence, the Republicans are charging families who played by the rules thousands of dollars in new taxes when the overpayments went from Treasury to the insurance company. These are not families getting so-called overpayment checks or cash from the government. Today, the rubber meets the road, and I urge all my colleagues, Democrats and Republicans, to join me in supporting this amendment. I especially appeal to my Republican colleagues, all of whom in this room signed the Grover Norquist Pledge from the Americans for Tax Reform to not raise taxes. This bill violates that pledge and will saddle millions of Americans with new taxes. Now, I know my friends on the other side will argue that the true-up language is not a tax. Well, don't take my word for it. The Nonpartisan Committee on Joint Taxes scored my amendment at 0, while scoring this Republican bill as raising taxes by $25 billion. The revenue from the Republicans' new tax increase is not from people gaming the system, but rather normal fluctuations in the income of people who are likely to be on in the health exchange, people with hourly wage jobs who suffer from layoffs during the year, and these are working people who have no opportunity to obtain health insurance from their employer. Mr. Chairman, H.R. 705 is a massive tax increase on the middle class, and this Democratic amendment guts this Republican tax increase on middle-income families earning up to $88,200 for a family of 4. Democrats want to enact the repeal of 1099 reporting requirements. We tried to do that in July of last year with deficit-neutral bill that closed loopholes and allowed for the exporting of U.S. jobs overseas, and we were blocked by the Republicans. Recently, the Senate passed a bipartisan deficit-neutral repeal of the onerous 1099 business reporting requirement. We support that. Democrats are ready to repeal this onerous provision on the job creators in America, but we will not do so on the backs of the middle class in this country. I urge you all to support this. The only thing true about the true-up is that it will truly raise taxes on the middle class. If you oppose this amendment, you will be voting to raise taxes on the middle class.
Gentleman's time has expired. Is there further discussion?
Seek recognition.
Gentleman from Texas is recognized for 5 minutes.
The subsidy recapture provision is not a tax increase in any way, shape, or form, and I would think members of this Ways and Means Committee especially would know the difference. Only Washington Democrats could call recovering improper, excessive, and possibly fraudulent subsidies a tax increase. This provision would save taxpayers a total of $20.49 billion, and because the IRS will recover these payments on future tax returns, the Joint Committee on Taxation technically scores this as both reducing outlays and increasing revenues, but this is an anomaly. The results from Democrats putting the IRS in charge of government-run health care instead of another agency like Health and Human Services. Every current Democrat member of this committee, including my friend, the author of the amendment, voted for an almost identical provision in December to pay for a one-year fix for doctors and Medicare. That vote was 409-2. And are these same committee members saying they raised taxes on the middle class just 2 months ago? And speaking of that December 2010 provision, the Health and Human Services Secretary Sebelius said, the legislation also changes the way overpayments to the health insurance premium tax credit are paid back, quote, making it fair for recipients and all taxpayers. Repeat that, making it fair for recipients and all taxpayers. Truth of the matter is, common sense tells you if a cashier gives you back more change than you deserve, returning it is not a tax increase. And conversely, if your electronic payment system sends 2 checks to the mortgage company this month, insisting they return it is not a tax increase. This is not a serious amendment because if this bill went to the floor without an offset, it would not only violate House rules, but it would increase the deficit. This is despite the fact that House Democrats have repeatedly said the 1099 repeal must be paid for. I yield back.
Chairman.
The gentleman yields back. Mr. Levin is recognized.
Well, first of all, it is completely inaccurate to say that this is the same as what was done some months ago. That's simply not true. What was done some months ago was to end the cliff. And it is really, if I might say so, a misrepresentation to say they're the same or even close to the same. Secondly, I want to read from the Internal Revenue Code, Section 36B-F, subparagraph 2. In general, if the advance payments to a taxpayer under Section 1412 of the Patient Protection and Affordable Care Act for a taxable year exceed the credit allowed by this section, determined without regard to paragraph 1, the tax imposed by this chapter for the taxable year shall be increased by the amount of such excess. I reread it. The tax imposed by this chapter for the taxable year shall be increased by the amount of such excess. This is a tax increase. And what it is a tax increase. If you look at the code, essentially what it does is to eliminate the cap, the two categories, which in many cases are middle-income taxpayers. The first category, at least 400, but less than 450% of poverty. The cap, 3,000, eliminated. At least 450, but less than 500% of poverty, $3,500 cap is eliminated. So essentially, if you vote for this, what you're doing is to eliminate the cap for the people in those two categories. And we're going to ask Mr. Barthold a lot of examples, and I think they're going to show that in numerous cases, if you vote for this, you're going to be voting to increase taxes on middle-income taxpayers.
In a minute, Mr. Pasquarello, I'll go to you. I will just say this is essentially the same provision that the Democrats used to pay for the SGR, and it is correct, and I have the time, and I will just say to the gentleman that that was scored by the Joint Committee on Taxation as, quote, using your analysis, raising taxes on 200,000 people. The fact is, neither of them are a tax increase.
The gentleman yield?
Not yet. Neither of them are a tax increase because these are taxpayer dollars which people are receiving to which they are not entitled. So this is about taxpayer protection. And I will just say that the gentleman from New York's amendment would send the bill to the floor without an offset. And as we know, under the House rules, that would be a violation. And so this policy that we all agree on in terms of repealing 1099s would not be able to go forward because there would be a point of order raised against it. But this is something that seemed to be okay when the other side was in the majority, but now we're finding that there's another position, but it is essentially the same provision. And we know it's an anomaly because you chose to run this program through the tax code. And this is one of the problems with the IRS writing checks to people. And this, frankly, should have been put in a different agency. And had it not been in the tax code, you wouldn't even have this, quote, technical issue that we're talking about. So with that, I yield to Mr. Pasquarello.
Would you just yield for a moment?
Yes, for just a brief comment.
Yes, you would. You said that they received these funds. How do they receive the funds?
Well, this is a refundable tax credit.
But where does the check go to? Do they actually touch the check?
They receive the benefit.
Do they receive the check itself?
They receive the benefit of the funds in order to get the health insurance benefit.
Where does the money derive from? Where does it come from?
Well, the money comes from the American taxpayer.
The Treasury Department.
This is not the time to debate.
Well, no, but you made a point about, Mr. Chairman, you made a point that they received this.
Reclaiming my
time.
They
received it fraudulently. They have not received it fraudulently.
Reclaiming my time. I will now yield to the gentleman from New Jersey.
To strike the last word, Mr. Chairman, I would yield to Mr. Crowley.
Thank you, Mr. Pasquale. I appreciate you yielding. Let me make the point here. These individuals and these families, these hardworking middle-class families, do not receive directly this money. It is paid to the insurance companies. The insurance companies get the money, not the individuals. And through no fault of their own, hardworking Americans who play by the rules, who are engaged in these exchanges for the purpose of providing their families with health insurance, now have an anomaly that comes up. Because they did a pretty good job at work, they got a $250 or $500 bonus. And that little bonus ticks them over the edge, over the cliff.
Would the gentleman yield?
Not at this moment. I'm going to finish my point. They tip over the cliff. And they now have to pay back almost $5,000 of money they never received. They've already put in over $8,000 of their own dollars. And they have to pay it back. That is the tax increase. Now, I did not sign Mr. Grover Norquist's petition from the Americans for Tax Reform. I don't think any of my colleagues on this side of the aisle signed it. I believe, if not all, many of you did sign that. And if you want to talk about what we did last year, if we did this last year and we raised taxes last year, well, then that's a twofer. You did it twice, many of you. I didn't sign that pledge. And what we're trying to do here is to save the American middle class from an additional tax increase. Let's be clear. If you vote against this amendment, you will be voting to raise taxes on many of the middle class who all they're trying to do is avail for themselves and their families an opportunity to afford health insurance. Health insurance. And I yield back to the gentleman.
Yes, and
gentleman from New Jersey has the time.
Thank you, Mr. Chairman. And I would yield to the gentleman from Wisconsin, Mr. Kind.
Well, I thank the gentleman for yielding. And, Mr. Chairman, I think instead of us trying to tie ourselves up in knots, trying to find an acceptable and hopefully bipartisan offset, because there is wide agreement to repealing the 1099 provision, why don't we look at what the Senate did? They received 81 votes over there, calling for rescission authorities on unobligated funds. Typically around here, if the Senate agrees on anything with 81 votes, it's tough to move them off that to begin with. And I agree with the gentleman from New York. I think this restores the cliff that we were trying to avoid in December with the 409-2 vote that was taken in a bipartisan fashion. We were trying to deal with some inconsistency with the law that was passed, deal with a better transition, not have such a steep cliff that this legislation will restore. So as the gentleman from New York states, and he's correct on it, if someone got some type of year-end bonus, then if you're $1 above 400% poverty, you could lose it all. And that would be a huge tax hit for a working-class family. That would be unexpected, merely because of some unexpected year-end income that they didn't realize was going to come to them that would affect, what they're going to get credit for. So I think, why not take a look at the Senate and what they've used as an offset that 81 senators agreed to already. We can get rid of the 1099 problem, which there's wide agreement in doing. We can avoid a huge steep cliff that would result in a big tax increase for working families throughout the country, and we can move on to some other issues. I thank the gentleman for yielding.
Yield back, Mr. Chairman.
The gentleman yields back. The gentleman from Louisiana is recognized.
Thank you, Mr. Chairman. What the gentleman from Wisconsin is suggesting, the Senate approach, is not within the committee's jurisdiction, point one, and not sustainable in the long run. Mr. Chairman, I have a letter here. I'd like to ask unanimous consent that we submit this into the record. This is a letter dated February 10th, 2011, to the Honorable Speaker, John Boehner, and the Honorable Majority Leader, Eric Cantor, from three members of this committee, Mr. Kind, Mr. Crowley, and Ms. Berkeley. And I'm just going to read a small part of this. It says, as members of the House Ways and Means Committee, we are writing to request that you direct the appropriate committees to immediately move legislation to eliminate the expanded 1099 reporting requirements for business while fully offsetting the estimated $22 billion cost. And then it goes on to say, however, given the budget deficit, it is imperative to be fiscally responsible and ensure the legislation does not add to the deficit. I believe that's what we're proposing here. I would like to
Gentleman
enter this
yield?
letter into the record.
Without objection.
Listen, if the gentleman would
Gentleman
yield, if the gentleman yields, since you're citing my letter, you can also further read in the letter
As
that
the
we're
gentleman has not
recommending.
yielded. The gentleman controls the time.
Mr. Chairman, I'm prepared to yield back. I just want to enter
Would you
this letter.
gentlemen yield, Doctor?
I'll yield. I'll yield.
Gentleman yields to the gentleman from New York.
Doctor, House Democrats championed PAYGO for tax cuts and spending increases, and Republicans gutted that common sense budgeting law. House Democrats have already voted to repeal 1099 in a revenue-neutral way in July on the floor, which I supported, under a suspension bill, and every one of the GOP opposed it and therefore killed that bill. This amendment seeks to have the House debate a better method of repealing the 1099 requirement. If we work together, which we should have done last year, should more cooperation, we can get a deficit-neutral solution to the President quickly and provide immediate regulatory reform to small businesses in a bipartisan, quick, and clean way. This bill is only prolonging the pain for small businesses while raising taxes on the middle class.
Let me reclaim my time and just say that what's being proposed in the Senate approach is not in the jurisdiction of our committee. And what we are proposing here is in the jurisdiction of the committee, and in the sense of fairness. Well, if something is overpaid, I think most American families out there understand that if there's been an overpayment, then there's an obligation to have that recouped. I mean, if you're interested in fiscal responsibility, and if you're interested in the integrity of this program and the integrity of the tax code, then I think this is something that should be common sense. And with that, Mr. Chairman,
Well, will the gentleman yield for a brief comment on my letter that you cited?
I will yield to Mr. Brady.
The gentleman from Louisiana has yielded to the gentleman from Texas.
I want to follow up with your point, Dr. Bustani, because it is very important. Amidst all this hoo-ha about tax increases and cliffs in the current Obamacare, the bottom line is very simple. The principle here is if someone in America gets a subsidy money from the federal government they didn't deserve, should they pay it back? This is a very simple principle. And with the deficit so dangerous these days, can you imagine letting almost $25 billion of tax dollars go to people who, by law, didn't earn them? This is a pretty simple principle here today. Our position is if you aren't eligible, you need to repay it. And we need to repeal this horrible 1099 provision, which is taxing typical Americans and small businesses unfairly. I yield back to Dr. Bustani.
Mr. Chairman, I yield back to you.
Gentleman yields back. Is there any further discussion?
Mr. Chairman?
Mr. Kind is recognized for 5 minutes.
Thank you, Mr. Chairman. Just a brief comment, because he did cite a letter that some of us on the committee had sent to the leadership. But to be clear in that letter, we were recommending that we look at the Senate offsets to deal with 1099. That was in the base of the letter, too. And when you get 81 votes in the Senate on anything these days, I mean, if history is any guide, it's tough to move them off from that position. Now, I am concerned, and I share the concerns from the gentleman of New York, and we're going to have some unintended consequences. And I don't think when you look at how this offset policy will play out, and the impact it will have on working families due to end-of-year unexpected income, you're restoring a cliff that we were trying to avoid with the 409-2 vote in December. It was a bipartisan agreement trying to fix an anomaly in the policy consequences that we were trying to avoid. We had bipartisan agreement on that. You're taking that back now by using this offset and restoring that cliff, and it's going to have some pretty severe unintended consequences for many working families throughout the country, and I don't think that's where you guys want to go with this offset provision at the end of the day.
Gentleman yield?
Yeah, I'd be happy to yield.
Mr. Chairman, what I find remarkable, once again, is we all recognize the burden that we were placing on small businesses on 1099. And we had an opportunity last year to amend that and to fix that burden. We have an opportunity once to do it again, to do it today. But the difference being this time we're choosing to, in the form of this bill, to remedy that by imposing upon the middle class a tax. If they, through hard work and playing by the rules, make just slightly more than the 400% FPL threshold. I don't really think that's what you want to do. I really don't think you want to do that. I can't imagine that your intent, any of your intention on that side of the aisle, is to hurt the middle class, but it will, because they never get that money. That money goes from the Treasury, is not mailed to their home. It's not like they get the check and they go to the bank and then they fill out a check to the insurance company. That money goes from Treasury to the insurance company. The insurance company gets that money, not the individual. It's not as if they had any choice to do. Instead of paying my premium with that money, I'll go on vacation down to Florida or I'll go to Hawaii. They don't get that opportunity to do that, to be fraudulent, to commit a fraudulent act. That money is sent to Treasury, and then if for some reason they get a little bit more, they actually do what you want them to do, be successful, earn a little bit more, get out there and work hard, study, get ahead, and when you do, we'll penalize you for it. You got health insurance, but you know what? We tricked you. We were going to help you, but now we tricked you. In fact, you got health insurance, but you got to pay for the whole thing. That's just not right. It is wrong. And I think when you examine this in your hearts and you look at this, you know that what we're trying to do is right. You know it. You have an opportunity to correct this now. Vote for this amendment. And I yield back to the gentleman.
Gentleman from Wisconsin yields back. Is there further discussion?
Mr. Chairman.
Gentleman from Washington.
Mr. Chairman, I think maybe another analogy might be useful. If a person is eligible at the beginning of the year for child care, they're making $20,000 and they get the benefit for the child care, and then in the second half of the year they get a new job and they make $60,000 in the second half of the year. So now their average income is $40,000. We don't go back and say, give us back what you got in the first part of the year on the basis that your average salary for the year. We stop the benefit at the point their income goes to $60,000. And what you're opening up the kind of thing where you're going to claw back in every program where we give anybody anything. If their circumstances change, as Mr. Crowley suggests, that they're doing what we want them to do, that is advancing, we're going to penalize them. We're going to say, don't go out and make any more money because you're going to have to pay back every benefit you got before. That's simply not what we want if we're encouraging people to move forward. The same is true here with health care benefits. If suddenly you make a little bit more money, that's what we want. Stop the benefit. But don't reach back and get what they got in the time when they were making very little and were having to somehow get by. They couldn't have bought it then out of their pocket because they didn't know they were going to make $60,000 in the last part. There's no fraud on their part. You're acting like they're fraudulent, like they have deliberately somehow milked the system. They didn't. They knew what their income was. They were eligible for a benefit to get health insurance. They got it. And then you somehow say, well, but your circumstances changed, so we're going to take it back. It is simply a disincentive for people, and that's not what you really want in the social program. So I would urge the adoption of Mr. Crowley's amendment.
The gentleman yields back. The gentleman from Wisconsin is recognized.
Thank you, Chairman. Let me just get into the notion that we ought to pick up the Senate pay-for this. The Senate pay-for is a gimmick. It actually violates the Democrats' own pay-go standard and pay-go rule. You can't go after discretionary spending, let alone unobligated balances, one-time money to pay for long-term tax policy. So the pay-for itself violates your pay-go system. It doesn't work, and it's a fraudulent pay-for because one-time discretionary cuts for long-time revenue changes does not add up. So, you know, if you had a different pay-for, then we might have a better argument here, but this pay-for doesn't work, doesn't fly, and violates your own pay-go system.
Gentleman Yale?
Sure.
Remember, the vote there wasn't a Democratic vote.
You know, I know we violate budget rules on a bipartisan basis around here all the time.
Okay. So, but you talked about a Democratic vote.
Yeah. So
and look, if you don't like the Senate pay for, don't put in a pay-for on the backs of middle-income taxpayers. That's what you're doing.
So reclaiming my time.
Work together to find a different pay-for.
Reclaiming my time, we're keeping this within the jurisdiction of this committee, number one. Number two, when have we ever gone into the jurisdiction of the Appropriations Committee and used discretionary spending, one-time money, to offset tax policy changes? Never, and we shouldn't start now. I end.
Gentleman yields back. Mr. Becerra is recognized.
Thank you, Mr. Chairman. First, Mr. Bartow, the question for you. The $25 billion or so that we are trying to offset here that was collected under the 1099 provision, that's not a new tax. That's just monies collected that would have been paid had they been submitted by a filing appropriately the first time around by the taxpayers.
Just to remember how the system is designed to work, there is this preliminary advance payment made, and that's what's being reconciled that you just described.
No, Mr. I'm talking about the initial.
Well, the initial calculation of that is based on information available to the exchange.
No, Mr. Let me. You're talking about the exchange on the healthcare side. I'm talking about the revenues collected from businesses as a result of filing the 1099.
Oh, I'm sorry.
Yeah. So let me rephrase the question, because maybe I didn't phrase it properly. With regard to 1099s, which is what gave the Treasury the additional $25 billion, it's not because there was an increase in or a new tax imposed to collect the $25 billion. It was a process put in place to collect uncollected taxes that were owed by
That's
small
correct,
businesses.
Mr. Becerra. It's a compliance improving measure.
So first, we're talking about money that would have been collected because it was owed to the taxpayers. And when you don't collect those dollars, as I think Mr. Neal tried to point out, you end up having to do other things, like we see on the floor of the House going on right now, where cuts are being made to low-income heating assistance. We're having cuts to the Social Security Administration and its operation, which will impact seniors' ability to get their disability checks or get their regular retirement checks sent out. And so consequences occur when some people don't pay their taxes. Other Americans have to make up the burden. And so this provision was put in the health care reform bill. Now, many, and I think there's almost unanimous agreement that the provision might end up being too burdensome on a lot of very small businesses. And so there's an effort to try to undo the burden, but at the same time, by undoing the burden, we lose the revenues that should have been collected because taxpayers owe the money. The question then becomes, how do you make up for the revenue? We haven't yet figured out a cleaner, more refined way to collect the money that's due from those taxpayers. But this provision, and the reason there's such objection to it, is imposing a tax on a very discrete population of Americans. In this case, it's middle Americans who happen to have tried to take advantage of now having an opportunity to get health care insurance and find themselves in a predicament, up to $12,000 worth of a predicament, where this bill, by the majority, would impose upon them a tax, as has been identified, on them for simply having tried to follow the rules. Now, there may be other ways to deal with it, but the fact remains that the bulk of this tax will be paid by people who are making somewhere around $75,000 to upwards of $80,000, because that's going to be the problem here, is that you're hitting people who are stuck. They're crunched all the time. They're not poor enough. They make enough money that they don't get benefits of some of the government programs that are out there to acquire health care, and they're not wealthy enough to afford the cost of a private health insurance policy on their own. And so they're going to be squeezed. And the result of this bill is that we're going to make it far more difficult for one slice of America, the middle of America, to be able to stay on health insurance, which is very difficult. If the gentleman from New York is asking for time, I would yield to him.
Thank you, Mr. Becerra. Mr. Chairman.
Gentleman from New York is recognized.
Thank you, Mr. Becerra. I know it's hard to be in leadership. We were there for 4 years, and we took some tough votes and hard votes. The creation of the Affordable Care Act itself was one of the toughest votes we had. and we had no support. There was no bipartisanship in that effort. And I understand it's difficult to lead, but tough decisions have to be made, and I think we can make a tough vote here, but one that will help the middle class if you work with us together. I would just, in response to Mr. Ryan about the committee's jurisdiction, if it is in the Ways and Means jurisdiction, what we are debating today, and that is the increase in revenue by $25 billion, it therefore is a tax increase, and that jurisdiction relies in this committee.
The gentleman's time has expired. Is there further discussion? Does the gentleman from Ohio wish to make a point of order, or does he withdraw his?
I'll withdraw my point of order, Mr. Chairman.
As no further members are seeking recognition, the question is on agreeing to the amendment offered by the gentleman from New York. All those in favor signify by saying aye. Aye. Those opposed, no. No. In the opinion of the chair, the ayes have it. A roll call. The clerk will call the roll. Sufficient number of hands being shown.
Mr. Herger?
No.
Mr. Herger votes no. Mr. Johnson? Mr. Johnson votes no. Mr. Brady? Mr. Brady votes no. Mr. Ryan? Mr. Ryan votes no. Mr. Nunes? Mr. Nunes votes no. Mr. Teaberry? Mr. Teaberry votes no. Mr. Davis? Mr. Davis votes no. Mr. Reichert? Mr. Reichert votes no. Mr. Bustani? No. Mr. Bustani votes no. Mr. Heller? No. Mr. Heller votes no. Mr. Roscom? No. Mr. Roscom votes no. Mr. Gerlach? No. Mr. Gerlach votes no. Mr. Price? Mr. Price votes no. Mr. Buchanan? Mr. Buchanan votes no. Mr. Smith? Mr. Smith votes no. Mr. Schock? No. Mr. Schock votes no. Ms. Jenkins? Ms. Jenkins votes no. Mr. Paulson? Mr. Paulson votes nay. Mr. Berg? Mr. Berg votes no. Ms. Black? Ms. Black votes no. Mr. Levin? Mr. Levin votes aye. Mr. Rangel? Mr. Rangel votes aye. Mr. Stark? Mr. Stark votes aye. Mr. McDermott? Mr. Lewis? Mr. Lewis votes aye. Mr. Neal? Mr. Neal votes aye. Mr. Becerra? Mr. Becerra votes aye. Mr. Doggett? Mr. Doggett votes aye. Mr. Thompson? Mr. Thompson votes aye. Mr. Larson? Mr. Larson votes aye. Mr. Blumenauer? Mr. Blumenauer votes aye. Mr. Kind? Mr. Kind votes aye. Mr. Pascrell?
Yes.
Mr. Pascrell votes yes. Ms. Berkeley?
Aye.
Ms. Berkeley votes aye. Mr. Crowley?
On behalf of the middle class, I vote aye.
Mr. Crowley votes aye. Mr. McDermott? Mr. McDermott is not recorded. Mr. McDermott votes aye. Chairman Camp? Chairman Camp votes no. The vote is 15 aye.
The clerk will report the vote.
Thank you. The vote is 15 aye and 21 nay.
There being 15 ayes and 21 noes, the amendment is not agreed to. If there are no further amendments, the question is on the adoption of the amendment in the nature of a substitute as amended. All those in favor signify by saying aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. I will now recognize Mr. Herger for the purpose of offering a motion.
Mr. Chairman, I move the committee favorably report H.R. 705 as amended to the House of Representatives.
The question is on favorably reporting the bill as amended. All those in favor signify by saying aye.
Aye.
Those opposed signify by saying no. No. The ayes have it. The motion is agreed to. A roll call is demanded. The clerk will call the roll.
Mr. Herger.
Aye.
Mr. Herger votes aye. Mr. Johnson.
Aye.
Mr. Johnson's vote is aye. Mr. Brady. Mr. Brady votes aye. Mr. Ryan. Aye. Mr. Ryan votes aye. Mr. Nunes. Aye. Mr. Nunes votes aye. Mr. Teaberry. Aye. Mr. Teaberry votes aye. Mr. Davis. Aye. Mr. Davis votes aye. Mr. Reichert. Mr. Reichert votes aye. Mr. Bustani. Aye. Mr. Bustani votes aye. Mr. Heller. Aye. Mr. Heller votes aye. Mr. Roscom. Aye. Mr. Roscom votes aye. Mr. Gerlach. Aye. Mr. Gerlach votes aye. Mr. Price. Aye. Mr. Price votes aye. Mr. Buchanan. Aye. Mr. Buchanan votes aye. Mr. Smith. Aye. Mr. Smith votes aye. Mr. Schock. Aye. Mr. Schock votes aye. Ms. Jenkins. Ms. Jenkins votes aye. Mr. Paulson. Aye. Mr. Paulson votes aye. Mr. Berg. Aye. Mr. Berg votes aye. Ms. Black. Aye. Ms. Black votes aye. Mr. Levin.
No.
Mr. Levin votes no. Mr. Rangel. Nope. Mr. Rangel votes no. Mr. Stark. No. Mr. Stark votes no. Mr. McDermott. No. Mr. McDermott votes no. Mr. Lewis. No. Mr. Lewis votes no. Mr. Neal. No. Mr. Neal votes no. Mr. Becerra. No. Mr. Becerra votes no. Mr. Doggett. No. Mr. Doggett votes no. Mr. Thompson. No. Mr. Thompson votes no. Mr. Larson. No. Mr. Larson votes no. Mr. Blumenauer. Mr. Blumenauer votes no. Mr. Kine? No. Mr. Kine votes no. Mr. Pascrell? No. Mr. Pascrell votes no. Ms. Berkeley?
No.
Ms. Berkeley votes no. Mr. Crowley?
No.
Mr. Crowley votes no. Chairman Camp?
Yes.
Chairman Camp votes yes.
The clerk will report the vote.
Mr. Chairman, there are 21 yeas, 15 nays.
There being 21 ayes and 15 noes, the motion is agreed to. H.R. 705 as amended is ordered reported to the House of Representatives. Without objection, staff is authorized to make technical and conforming changes to the bill. Without objection, members will have an additional 2 days to file with the committee clerk supplemental, additional, or minority views. So ordered. There being no further business before the committee stands adjourned.